Hello and good evening, and welcome to this session. My name is Ankit Sharma, and I'm a PhD scholar at Gujarat University. And currently, I'm doing research on non performing assets. And this research is interdisciplinary. Combining the theories of economics and good evening, and welcome to. I'm combining the theories of economics and accounts and finance. So yeah, that was a basic introduction about me. And welcome to this session where we'll be discussing the basics of cost and management accounting. Right? Since these are just introductory sessions, these are demo sessions. We will be looking at these topics in brief. We will not be going into that much details. These sessions are just to give you a perspective of how classes will be conducted at College Dekho, and these sessions again are just to give you a basic perspective, a basic look into these different types of theories of different subjects. And in this session we'll be looking at the basics that are related to the cost accounting and the management accounting, right? So let us begin. First of all, let us start with the very basics, the very basic definitions of different types of terminologies that are related to cost accounting or management accounting. And to begin with these basics, to begin with these definitions, let us first understand what does this term cost means, right? So cost is nothing but the amount of expenditure, right? The amount of expenditure, it could be actual or it could be notional expenditure, and the amount of expenditure that is incurred on or attributable to a specified article, product, or activity, right? So any amount of expenditure that a company pays, or any amount of expenditure that a company incurs on various products or activity is the cost for that company, for that particular raw material or that particular service, right? Then after cost comes the costing. Now what is costing? Costing is defined as the technique and process of ascertaining costs, right? So once you have understood what cost means, it is the amount of expenditure, then the process or the technique with which these costs are ascertained, as in the value or the amount of these costs are ascertained, is this process is called costing, right? And after cost and costing comes the cost accounting. So up until now we have understood what the amount of expenditure is, and then we have ascertained, in the first part we know what the amount of expenditure is. In the second part we know how this cost has been ascertained, how this cost has been measured, how this cost has been calculated, right? So after both of these things are done, then we come to cost accounting, which is related to the which is a process of accounting for cost, right? So this is the process where these different types of costs of raw materials or services that a company pays, that a company incurs, right? So these different types of costs of a business, of an accounting firm, uh, these different types of costs are accounted for in the books of accounts of that particular company, right? So this process is just uh, related to accounting for these different types of costs. Then comes the cost accountancy. Now what is cost accountancy? It is defined as the application of cost and cost accounting principles, right? And various types of methods and techniques to the science, art, and practice of cost control. Now what is cost control? We'll be looking at it in the next slide. But cost accounting, but cost accountancy is basically related to the application of costing and cost accounting policies. So the different types of principles, the different types of policies that exist in a particular business. This process of this term, this cost accountancy, is related to the application of these different types of policies, application of these different types of methods that exist in the business. Right now, now that we have understood what cost accounting means, now let us understand what management accounting means. Right, so management accounting is the application of the principles of accounting and financial management. Right, so in cost accounting, the application of costing and cost accounting principles was there, but in management accounting, the management accounting is the application of the principles of accounting and financial management, and this application is done to create, protect, preserve, and increase value of the stakeholders. Right, and what are these stakeholders? The ultimate goal here is to increase the value that is added for shareholders, which are the owners of the companies. Right, and management accounting is an integral part of the management. Right, it forms an integral part of the decision making process. It makes an integral part of the strategy building process for any company. Right, and it assists this management accounting, it assists the management by provision of relevant information for planning. It could be organizing, it could be controlling, or it could be decision making. Right, so various types of uses exist for management accounting. It basically helps the management in ascertaining or analyzing these financial statements, analyzing these reports, and after analyzing, it helps the management in building a plan for the financial year that is about to come, or the financial period that is about to come. Right, now that we have understood these basic terms, now let us understand what cost management means. So cost management is an application of management accounting. It is an application of this management accounting. The different concepts that are related to management accounting, methods of collection, analysis, and presentation of data to provide the information that is needed to plan, monitor, and control costs. Right, so it is concerned with providing the management, it is concerned with providing the internal users with information that could help this management, that could help the managers of the company in in the planning process, or in the monitoring process, in analyzing whether uh, the costs are minimized or not, whether the cost could be minimized or not. And then ultimately, cost management helps the management of the company in controlling costs. Right, so there are these two different terms, such as the controlling of cost and the reduction of costs. Right, both of these terms differ from each other. We will be looking at them later on in this PPT. Right, so these were just the basic terminologies that are related to cost accounting and management accounting. Right, and the basic purpose of all of these terminologies combined, the basic purpose of cost accounting or management accounting, is to assist the management. Right, all of these different types of processes accounting is ascertainment of cost. Now what does this ascertainment of cost means? It means that the main objective of cost accounting is accumulation and ascertainment of cost. Right, so the costs, various types of costs that exist in any business, it could be related to the cost of raw materials, or the cost of services that are used in order to arrive at the final product, or in order to arrive at the final service. Right, so the ascertainment of different types of costs is done here uh, by the help of cost accounting process, where the costs that exist in the business are accounted for in the books of the company. Right, so this was the first objective. Now let us look at the second one, which is the determination of selling price and profitability. Right, now how does cost accounting helps in the determination of selling price? It helps in the determination of selling price in a way that, now that the cost has been ascertained for a business. Right now that we know what is the cost uh, that a company incurs to manufacture a certain type of product, now that we know the cost of now that we know the cost of arriving at the final service of a business, right? So this on this cost value, on this final cost value, a profit margin for the company is always added, right? And this profit margin, after it is added to the cost, always comes to the selling price. So this is basic formula that we all know, that cost for a company plus the profit margin plus the total profits for that company is always equal to the selling price, right? So cost accounting, by helping the company in ascertainment of cost, also helps the company in determination of selling price and the profitability, right? Because we know what the cost is and we also know what profit we want, and together both of these terms, both of these amounts together arrive at the selling price of a commodity or selling price of a service, right? Now another objective of cost accounting is cost control. Right, in the previous slide we talked about this, that the cost control and cost reduction could be that they are two different terms and they mean two different things. And so first of all, as the name suggests, as the logic goes, that cost control is related to just the controlling aspect of this process, just the controlling of the costs that already exist in the business, right? So just controlling uh, the cost and trying that these costs do not go beyond a certain level, right? Because if the costs go beyond a certain level, then your profit margin will decrease, and uh, if it goes beyond the margin level a lot, right, then not only the profit margin would be reduced, but the company would also incur a loss, right? And as the name suggests, for cost reduction, that it is not just uh, concerned with the controlling aspect of the cost, but it also is concerned with the reduction aspect of the cost, right? So first of all, we ascertain the cost of the company, right? And on this cost, we add the profit margin of the company, and then we arrive at the selling price. And then once these two steps are fixed, right, then we try to control the cost, right, and not letting it go beyond a certain level, so that our profit margin will ultimately increase, right? And once these costs are controlled, right, we do not allow them to go beyond a certain level, right? And after these costs are controlled, then comes the process of cost reduction, right? And then this in this cost reduction process, we try to uh, reduce the total cost of the company, the total cost that is incurred by the company in terms of the cost of raw materials, or in terms of the cost of services that are being used by the company in the production of its final commodity, or in the production of its final service that is being offered to the public at large. All right. Now, let us look at the last objective, which is assisting management in decision making. Now, all of these objectives combined, right? The ascertainment of cost, the determination of selling price and profitability, the cost control, the cost reduction, all of this information combined gives the management an inclusive approach, an outline of different types of cost, an outline of different types of uh, different perspective from let us say the profitability perspective, is in how much profit should be added to the cost or how much selling price could be, how to determine the selling price. And in order to look at all of these factors, the management is uh, brought forward different perspectives that are related to the cost that the company is incurring or is expected to incur in the future, and accordingly, using this information, the management is assisted through all of these statements, through all of these processes. The management is assisted in decision making, in making budgets for the year that is about to come, right, where certain amount of profits are allocated for certain types of costs in advance, in future, right? And not just in not just in budgetary control, not just in ascertaining budgets of different types of costs, but also in deciding whether there has to be any increase in the selling price of the commodity, whether there has to be an increase in the profitability margin, the profit margin of the company or not. So all of these processes combined, all of these objectives combined assist the management in decision making. All right, now let us look at the difference that exists between the cost control and cost reduction. Hmm. So we understood that cost control and cost reduction are two different aspects that are related to the cost that a company incurs, and we by now we have understood that cost control is just concerned with the controlling aspect of the cost, but the reduction aspect is not just concerned with the controlling aspect, but it is also concerned with reducing the cost that is already there, that already exists in the books of accounts of a company, that already exists in the day-to-day operation of a business. Right, now let us look at a few basic differences between cost control and cost reduction, just to give you a basic understanding, a brief understanding of how these two are different. Right. So first of all, in the cost control aims at maintaining the cost in accordance with the established standards, right? So just like we talked about that, it is concerned with just the controlling aspect of the cost, right? In controlling the cost, that it does not go beyond a certain level, that it does not go beyond a certain standard that has been set by the company. And these standards could be such as, let us say that a company pays 1 lakh rupees for 100 kgs of raw materials, and the standard that is set is, let us say, 1100 rupees, right? So the company could decide that 1100 is the maximum amount that the company could pay for the purchase of raw materials, and if the cost goes beyond this particular level, goes beyond 1100, then there is a problem, since the profit margin would decrease, and not just the profit margin would decrease, the company could also incur loss because of this. Because this was just a small example, in the practical world, in the real world, these costs are very huge, and even a difference of let us say 100 or 20 rupees or 200 rupees per kg also differs a lot when these amounts are multiplied by tons of kgs of raw materials, right? So this was just an example. Now, on the cost reduction side, cost reduction is concerned with reducing costs, and it challenges all standards and endeavors to better them continuously. Right? So once, I'm sorry. So once a business has been able to maintain the costs, and a business has been able to maintain the standards that are already set by the company, that are already set by the management of the company, then the next process that comes is challenging the standards that are set, right? And not just challenging them, but also constructively challenging these standards in order to reduce these standards, as in bring them to a lower level, so that the costs are reduced and that the profit margin is increased. So even let us use an example here again, that the selling price of a commodity is 100 rupees, and the cost is 20 rupees, and the profit margin is 80 rupees. All right. And if the first of all, the company would want to hold this cost at 20 rupees, right? This company would not want to go beyond 20 rupees of cost, because that is the standard that has been established by the management. Now this is concerned with cost control, but in cost reduction, this company would challenge this standard of 20 rupees, and it would challenge that a lower level could also be paid for the same amount of raw material, for the same amount of services. So now let us consider that this cost reduction has happened in the company, and now the company is not paying 20 rupees for cost, but the cost that is being incurred right now is 15 rupees, right? So the cost has reduced by 5 rupees, and the profit margin ultimately has increased by 5 rupees, and now it is 85 rupees now, as compared to 80 rupees earlier on. So this is just a basic distinction between cost control and cost reduction, and some other distinctions could be that cost control seeks to attain lowest possible cost under existing conditions, right? So this is important, that the existing conditions keep on existing in the same business, as uh, in the same existing conditions, what is the lowest possible cost that the company could pay for the same amount of raw materials. All right. Now here, the cost reduction recognizes no condition as permanent, since a change will result in lower cost. We have understood this. Now, in case of cost control, emphasis is on the past and the present. Past in the sense that whatever cost has been incurred by the company for the same amount of raw material uh, in different periods of time, and what is the standard that has been established until now, and if the company has been able to follow this standard, and if what is the present uh, what is the reality of this set standard as of now, as of today. While in the case of cost reduction, it is on present and future, right? Because we are talking about reducing the cost in the future, which is about to come. So where we are challenging, where we are constructively challenging the standards that are already in place, that are already set by the management of the company in the past, and we are looking to challenge these standards and change these standards in the period that is about to come, the financial period that is about to come, right? So it is related to the present and the future. Now cost control is a preventive function, and since it is prevented, the increase in cost is prevented, right? And cost reduction is a corrective function. It is in a way going back, the cost is in a way going back in order to increase the profit margin of the company. Now it operates even when an efficient cost and control system exists, right? Cost control ends when targets are achieved, and cost reduction has no visible end. Let us understand this. Cost reduction has no visible end, because a company will always and always strive to challenge these standards constructively, to challenge the cost standards constructively, and the company will always and always try to reduce the cost in order to increase the profit, and in order to keep on increasing the profits that exist in the business. Alright, so these were some basic differences between cost control and cost reduction. Now let us look at some of the differences between cost accounting and management accounting. Now, on the basis of nature, cost accounting records the quantitative aspect only, right? While on the other hand, management accounting, since it is concerned with financial accounting as well, it is concerned with financial management as well. It records both the qualitative and the quantitative aspect, right? And then on the basis of objective, cost accounting records the cost of producing a product and providing a service. While on the other hand, management accounting provides information to management for planning and coordination, right? So because uh, an inclusive or an outline of the performance of the company, of the financial accounting of the company, of the financial performance of the company is given to the management under management accounting. This information helps the management in the planning process and in coordinating the different uh, departments of the company, or in coordinating the different types of functions of the company. All right. And now, on the basis of area, cost accounting only deals with cost ascertainment, right? Because the whatever the cost that exists in the business is being accounted for in the books of accounts of that company. So cost accounting only deals with cost ascertainment, while on the other hand, management accounting is wider in scope, as it includes financial accounting, it includes budgeting, it includes taxation, it includes planning, and etc. Right? So this is much wider in scope. The outline that is given here in the purview of management accounting is much broader in sense than it is in the cost accounting. Now, on the basis of recording of data, cost accounting uses both the past and the present figures. While management accounting, since we are talking about the planning process, we are talking about the budgeting process, where budgets are allocated to different types of financial items, to different types of expenditures that are expected to be incurred by the company. And since all of these actions, all of these different financial aspects are in the future, which is about to come, management accounting is always focused with the projection of figures for the future. All right. Now, on the basis of development, cost accounting's development is related to industrial revolution because the cost is controlled. The cost is first of all ascertained, and on the basis of this ascertainment, it is accounted for in the books of accounts. While on the other hand, management accounting develops in accordance to the need of the business or the modern business world, right? Since there is no rigidity that is followed in management accounting, since it includes various types of functions such as the financial accounting, the budgeting, the taxation, the planning, the scope for management accounting could always increase, it could always widen to include more and more functions of the business, or more and more requirements of the business, and therefore it is always in accordance to the need of the modern business world. All right. Now, on the basis of rules and regulations, cost accounting follows certain principles and procedures for recording costs of different products, while on the other hand, management accounting does not follow any specific rules and regulations. Right? Because we are talking about the cost that is being accounted for, it is always the case that certain principles or certain procedures for recording costs of different products are always being followed. Right? Now, let us look at the basic differences between cost accounting and financial accounting. Uh, First of all, the objective. In financial accounting provides information about the financial performance of a country. So, whenever we hear the term financial performance, it has to be understood that we are talking about the performance of an entity over a period of time. And where in the financial statements is the performance of an entity represented? It is represented in the statement of profit and loss or the profit and loss account, right? So financial accounting provides information about the financial performance of an entity, while on the other hand, cost accounting is ascertainment of cost for the purpose of cost control and decision making, right? So again, this is much broader in perspective. This is much broader. This gives a much broader view than compared to cost accounting. Then, on the basis of nature, financial accounting classifies records, present and interprets transactions in monetary terms. While on the other hand, cost accounting classifies cost records, present and interprets it in a significant manner. And this interpretation is for the internal users of the company. Most of the times, it is for the internal users of the financial statements, most of the times, such as the management of the company, while the information that is included here is generally for the stakeholders in general, and these stakeholders could be internal, these could be external, these could be the potential investors, these could be the current investors, right? So the again the process of classification, the process of recognition or measurement or reporting or disclosure again is broader in sense in the financial accounting than it is in the cost accounting. All right. Now, in the financial accounting, every data that is recorded on the historical basis, is recorded in the historical values of those particular financial items, right? But in cost accounting makes use of both the historical cost and the predetermined cost. All right. Now, on the basis of users of information, financial accounting is used by various types of stakeholders, that is the shareholders, the creditors, financial analysts, and government and its agencies, right? But cost accounting is generally used by the internal management. So this is again a very basic differentiation, that cost accounting, that financial accounting is done for the external users or the internal users in general, but cost accounting is done specifically for the internal users, for the internal management of the company, right? Then on the basis of analysis of cost and profit, Financial accounting shows profit or loss of the organization, either segment wise or as a whole. Alright, now cost accounting provides the cost details for each cost object, that is the product, process, job, contracts, etc. So it is a much detailed view into the different types of cost objects that exist in the company. While on the other hand, financial accounting is again a broad perspective of the financial performance of the company, or whatever is going on in different segments of the company, in different departments of the company. Right? Then the time period for financial accounting. Financial statements are prepared usually for a year, which is a financial year, which is from April to March of a year. While on the other hand, cost accounting, reports and statements are prepared as and when required. Since these are for the internal users, these are for the management of the company, they could be prepared as and when required according to the needs of the management of the company. Right? And in the presentation of information, a set format is used for presenting financial information. All right, this set format, this disclosure requirements, this reporting requirements, all of these are issued as a standard by the Companies Act, or either by the RBI, or either by the SEBI. So these disclosure requirements or recognition requirements, all of these are the same. All of these are common for all the companies that exist in a particular economy and who are registered under the same act, such as the Companies Act of 2013 or 1956. While cost accounting, on the other hand, has no set formats for presenting cost information, uh, and since these again are for the internal users of a company, these are for the management of the company, there is no prescribed format, or there is no set standard on the contents of these internal reports. And so this is again one of the basic differences. And now let us understand how the cost accounting and management accounting uh, and how the cost accounting and management accounting with financial accounting, as in how these three are interrelated. So we understood by now we have understood the differences or the meanings of these terms, such as the financial accounting or the management accounting or the cost accounting. Now all these three different types of accounting, all these three aspects together make part of the financial management for a company, right? So it is not just one aspect. Cost accounting will alone won't help the company in gaining a broader perspective of the company. Management accounting alone won't help the company in gaining a broader perspective. But all of these different types of accounting combined together gives a broader perspective into the workings of a company, a broader perspective into the financial position or the financial performance of the company. And the relationship among cost accounting, management accounting, financial accounting, and financial management can be understood using this particular diagram, as in just not just one aspect, but all of these three different aspects together form part of the financial management of the company, right? So with this we have come to an end of this introductory session, and I hope these few basic concepts were clear to you, and I hope you had an understanding of what these different terms like cost accounting or management accounting means, the basic differences that exist between them, and how all these three of or how all these different types of aspects of accounting together help the management in financial management and in decision making and in making plans for the next year, right? And this is it for this session. I hope to see you again in another one. Thank you so much.